Hello, good day to you all. I hope you're all doing great. I'm here with you for the daily analysis of the USD-JPY currency pair on February 25th. We're looking at the daily time frame. As you saw on Monday at the start of the week, the price dropped and...
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Reacted to the daily BPR zone down to the 154 level. After reacting to this zone, the price rebounded upwards, and yesterday a strong bullish candle was recorded. As you can see, today's candle has also been bullish so far, and the price is trading with about a 0.5% increase. In today's move, the daily fair value gap that we had here was also filled. The main reason for the bullish move in this asset was a report about a meeting between the Prime Minister of Japan and the Governor of the Bank of Japan, in which it was mentioned that there is not much willingness to continue raising interest rates. This issue led to a weakening of the Japanese yen, so much so that you can see in the previous trading day, the Japanese yen was traded by far as the weakest currency in the market. Furthermore, today as well, the Japanese yen was being traded with relatively good strength against the dollar during the Asian session, but once again it faced a lack of investor support, and currently it is being traded as the weakest currency in the market today. We are currently analyzing the 4-hour time frame. As you can see, since the beginning of last week, the price has been forming higher highs and higher lows, establishing an upward trend. This upward trend continued its movement over the past 2 days with the sharp weakening of the yen, and as you can see in the last 3 candles, it encountered strong support in the 4-hour FVG area and also formed a higher high. Currently, the price is moving toward the 4-hour FVG at 156.93. and we can consider this upward trend as ongoing. In addition to all of these important points, we also need to mention that in recent weeks, Japanese and American officials have clearly signaled and suggested that we can certainly expect some form of intervention and support from the relevant financial and monetary authorities for the Japanese yen. Just like before, when the price reached the 160 range, it faced a strong reaction and began its recent downward movement. Now, with the price of this currency pair rising again, there is a possibility of intervention by Japanese authorities, and another sharp drop could occur. Now, let's take a look at this week's economic calendar. So far in this trading week, we haven't had any major economic news for the Japanese yen, but on Friday, we will have a CPI report for the yen. Similarly, for the US dollar, on Thursday and Friday, we will have 2 important news releases: unemployment claims and core PPI. If these 2 news releases come out with a significant difference from the forecasted numbers, they can have a strong impact on the direction of this currency pair. We are currently analyzing USD-JPY on the 1-hour time frame. We can see that since the beginning of last week, the price has been moving within an ascending channel. In the recent move, the price dropped down to the 1-hour BPR, and after reacting to this area, it bounced back up at 155.36. As long as the weakening of the Japanese yen continues like this, we will mostly be looking for bullish setups. As a buy setup, we can consider that the price of this currency pair may come down in a short-term correction to the 50% line of the 1-hour FVG and the $156 area. In this area, we will have an overlap of the FVG and previous highs, which can provide good support for this currency pair. Ultimately, here, with liquidity being collected and a reaction to this area, we can enter a buy trade and target higher liquidity levels, such as the 1-hour FVG up to the price of $157. Wishing you success and profitable trades.